All right, I'm about to do another chart study of today's price action. So on the right, of course, I got the daily chart. I always want to start out looking at the daily just to kind of set the bias. So when I came to the charts, this candle hadn't closed yet, obviously. So the last daily candle that closed was this one. As you can see, it's a pretty strong down close candle, and I was thinking that a good idea for a liquidity grab or for an area for price to trade down to would be below this bearish candle's low. So that was kind of the framework that I was going with, and now I'm going to hop down into the lower time frames and kind of see how everything played out. So this is the 15-minute chart. Well, this is the 15-minute chart. You don't really get too much detail, but you can see these relative equal highs that formed. It's not that important yet, but we'll get to that in a minute. And then you can see the previous daily low on the 15-minute chart right here, and it's annotated here. Now we'll hop down to the 3-minute where you can get a little bit more detail. So here's the 9:30 opening. As what normally happens with price, after the open, price will trade in the opposite direction of the intended move. So you can see 9:30 open, price trades straight up. Now at the open, these relative equal highs hadn't formed yet. This line here was put on after all of this has happened. Um, but like I said, we'll get to that. So just imagine that's not there. But yeah, price traded straight up after the 9:30 opening, and then formed an intermediate term high because there's two short-term highs to both sides of it. So an intermediate term high, price should not trade above it. And as you can see, these two swings failed to break above this high, and price just kept pricing lower, which is a good sign for a bearish move. And then you get the displacement, and a fair value gap is formed. Price trades into that and eventually down to the daily low and even a little bit further through it. At this point, the relative equal highs is formed, which frames the idea for a bullish target. So daily low is taken out. So the next idea for a liquidity grab would be these relative equal highs up here. And I'll go ahead and type that in. Relative equal highs. So price took out the daily low. It made an energetic move up, breaking structure. It continues to move up, leaves a fair value gap. So a long entry could be taken in here, and you could target the relative equal highs. Now that I'm looking at this is a good time to point out that when you are bearish, up close candle should not be violated. So in this time frame, it's not as clear because there's not just single up close candles. But if I go to the 5 minute, potentially, you can see that that is the case. Price trades down. Price trades back up into this previous up close candle, which acts as real resistance. Pushes down. Price trades back up. Still respects this previous up close candle. Pushes down. Price trades up into it, but still does not break above it. Push it down one more time, and then finally it's violated, which is a sign that the algorithms have changed, changed their delivery. So I thought that was just a good example of real resistance in the market and how it acts in relation to the direction that you are framing your trade and the liquidity that you're targeting. The same thing over here. It's not one single down candle, maybe on the 15. It is. So, and this is actually a pretty good view of this whole thing. But price traded up after taking liquidity, broke this high, continued to price higher. Can't see the fair value gap here, but you can see this down close candle. And if the buy is just bullish at this point because we've taken out a daily low and prices broken structure to the upside, and our buy is just bullish to target these relative equal highs, then down close candles should not be violated. And as you can see, price trades down, taps into it, respects it, acts as real support, and ultimately hits and takes out the relative equal highs. I think today was a pretty good day as far as getting another example. Um, these things are continuing to play out like clockwork, essentially. And I'm going to continue to do these until I know it like the back of my hand. But that's all I got for this one. Oh, and by the way, um, this zone right here just denotes or highlights the lunch hour. So it just starts at noon and ends at 1, um, just to kind of separate that time of day as an area that, no trading should happen and kind of some funny price moves might happen. But, yep, that's all I got.